I think if you do deals that are not aligned with your strategy, you quickly get distracted and lose focus because you now have, look, in a large company, right, as you appreciate, you have to deliver the quarter, you have to build your strategy, you have to execute your strategy, and you have to go after growth using every lever that's available to you. But all of those things have to have a common linkage. So if your M&A strategy isn't aligned to the way the strategy that delivers the quarter, like you eventually get disconnected.
Welcome to M&A Science, where leading M&A practitioners share lessons learned from their experience. If you're interested in keeping up with the latest from M&A Science, visit mascience.com and subscribe to our free newsletter. Every week, we share highlights from our interviews and invitations to events, online, in person, as we build the greatest community of forward-thinking M&A practitioners. Again, that's mascience.com. I'm your host, Kison Patel, CEO and founder of M&A Science. Joining me today is Daniel Gittsovich, Vice President, Corporate Strategy and Development at L3Harris Technologies. L3Harris is a defense contractor and information technology services provider traded on NYSE under LHX. Today, we're going to talk about how to create an agile M&A strategy. Daniel, how's it going?
It's great. Thanks for having me on.
Thanks for taking the time from doing deals to have a conversation with me.
My pleasure. My pleasure. This should be fun.
Can we kick things off with a little bit about your background?
Sure, absolutely. So maybe I won't go all the way back, but I started my career post-undergrad in finance, working at Northwest Airlines. So when that company still existed, I think since then, on the theme of M&A, it was acquired by Delta, post one of the crises that the airline industry had. I did variety roles in finance and operations, financial analytics, internal consulting, project management over the course of a few years. And, frankly, airline industry is pretty depressing in the early 2000s and late 90s. And I decided to go get my business degree. Attended NYU Stern, joined investment banking immediately after. So first at Bank of America Merrill Lynch, then I worked at Deutsche Bank. So on Wall Street, where I focused on M&A across the industrial sector, spent a bunch of time with aerospace and defense clients, broader industrial, large cap companies like Boeing, United Technologies, L3 Communications, predecessor to the company I'm now working at, and a variety of sponsor-owned names across the sector, and stuck it out for quite a while, but then had an opportunity to join 3M in Minnesota, and it was a bit of a coming home for me, having grown up in Minnesota. So at 3M, I joined the corporate development team as leading really the M&A effort for one of the big business groups, the safety and graphics, helping them divest a number of businesses and acquire to help sort of reshape the portfolio and execute on a growth strategy. And I only did that for a year and then was appointed to lead overall corporate strategy for the enterprise. So that was more of a focus on broader portfolio initiatives. So getting into, why we do deals as much as actually executing the transaction. And then also broader strategic planning, enterprise initiatives, things like that. And had another role where I led M&A strategy, ventures, a variety of digital initiatives as vice president of business development for our largest segment. So sort of 40% of the company. So 6 years across a variety of these roles at 3M. And then had an opportunity to come here at L3Harris, where I lead strategy, M&A, ventures, and our integration efforts. And here, look, this is a unique time at L3Harris and for the company. And frankly, the reason for making the change from 3M was to join a new leadership team at a pivotal time where this is really a 3-year-old organization, $50 billion market cap, right? You're approaching 20 billion in sales. And it's an outcome of the merger between L3 Communications and Harris Corp. And the company is positioned to continue to focus on growth with inorganic and M&A in particular, a core part of our strategy. So there's a lot of interesting and complicated problems to solve, but importantly, driving shareholder value through M&A and other growth focused efforts.
You worked on all sides of the deals, and now the deals you're working on are top secret.
We do, as I think is practice in M&A, we keep things confidential as far as anything we're working on. Absolutely.
Do you have like an extra layer? Because I feel like you hit ITAR compliance and some of these interesting things. I don't know. Have you got to experience that where you actually handle data differently and just things like that in an M&A deal?
Yeah, we absolutely have incremental layers of clearance that may be required to even have conversations around certain topics, what certain companies might be doing. And, not every deal, not every company, not every business that we have has, these ultra secret elements, but in some cases, yes, we will get into a SCIF, a secure secure facility to have these conversations with only those individuals who are appropriately cleared and have the right level of access.
There's a lot we could talk about there, but that's what we're here to talk about.
Actually, we can talk very little about very little in that area.
Fair enough. Let's get into our topic today. Why does your strategy need to be agile?
Yeah, Kison, I think as I think about what an agile strategy is, and especially because agile is just such a broad term, but and especially when you think about M&A, is it, does it need to constantly vary? Does it need to be adapt? Does it need to just be fast and quick and, be able to move on a dime? And, for us, I kind of think about it as, it is constantly evolving and it is working our deal pipeline, both, top down and bottoms up. So we identify areas of focus, that help us build that target pipeline. What are the biggest markets and capabilities to go after? The biggest and growing areas of the budget where we might be underrepresented, the areas where, we really have the strength and capabilities that we can leverage and build off of, right? And then we look at what are the targets that are potentially out there that actually fit these strategies and areas of focus, so that we're not waiting for things to come to market, and we're constantly working to unlock opportunities of interest. And, that might be by talking to companies directly and approaching companies directly, not necessarily with the message of like, hey, we want to acquire you, but hey, we want to establish a relationship, right? We establish these relationships with owners of companies. So for private equity owned businesses, I think a key lever is frankly just knowing the partners, the funds, how they think about the future of those companies, if they're building or if they're exiting, and position yourself as a good home for these businesses. And then even with, defense is a little bit unique and interesting, the defense sector. It's, when I was working at 3M, it was much more clear cut of who's a competitor, right? And who's a partner and who's a supplier and who's a customer. Here, your customer is also your competitor, is also your supplier, is also your partner, right? We all depending on specific program, opportunity, contract, you will have a different relationship with the very same firms, right? So, the Lockheed, Northrop's, right? We all work together and we compete against each other. And the reason, that's important is that ultimately, I would say we all try to serve the customer, right? And the ultimate customer here is the government and departments of defense around the world. So we have to figure out how to collaborate, and this whole agility of, we have to go top down, we have to go bottoms up, we have to make sure that the targets we identify, they might not in all cases be perfect, but we have to figure out how it might fit the strategy that we're pursuing at any given time.
Oh, this is gonna be fun to talk about. Now, since our prior, I'm like twice as conscious of what I'm going to ask you here. So they may be a little vague questions, but the first thing, when you describe, you're overseeing different business units with their own different sort of strategies that they're executing on. How do you prioritize that overall?
Yeah, I would say, and this is something that continues to evolve and continues to be a process that, is frankly, prioritization is a core part of what we do and what we need to continue to do. We have markets of focus, right? We have 3 big, broadly defined areas or segments, I would say. One, clearly communication systems business, and everything around that sphere that is a focus area for us. And that's a segment. We have great positions in that space, and we want to continue to build on that core. We have a great ISR and maritime franchise, and I'm probably going to skip some. So if somebody from L3Harris listens to it, they'll get upset, but it's not meant to offend whoever I miss. But ISR, in intelligence, surveillance, reconnaissance, and maritime franchises, they're terrific. Our space franchise, where we've had a tremendous amount of wins and where we're really positioning as that prime provider, migrating up the value chain from a legacy component provider, that's been key. So broadly defined, we've identified these areas, and then cyber continues to be a focus, but very consolidated and fragmented market. So challenging to go and acquire in those areas. So we identify these key markets for us to go after. And when assets come in, assets, I would say not become available, but when we evaluate the set of opportunities, and we do screens, we do evaluations, we look at sponsor portfolios that might be that have been acquired and frankly built over time. We look at competitor and customer, cooperator, partner businesses, and which ones could potentially not be aligned with their strategy as much as with ours. And we try to fit them into these buckets. And the first cut is, hey, does it fit into these areas where we really have a core strength that we can bolster, right? So for us, it is important that we're not just building scale for the sake of scale. We're looking at areas where we have strengths, key capability gaps, and then how a given, target might potentially fill that gap and bolster that core.
Would you then prioritize those strategies in general and saying, hey, this is sort of the top area where we really want to expand through acquisitions? And then I'm on your website, is like 14 different business lines. So I see how you can't name them all off at the top right there.
Yeah. So look, I mean, from the prioritization, without getting into the details of, which business unit and why, but there are key areas where frankly, in those 14 that you mentioned, we have the positions that we need and we don't need to go after. Will we prioritize? We'll prioritize depending on, the market attractiveness. Certainly, we're going to prioritize areas of growth, especially as it concerns the defense budget. Because for us, unlike 3M and a lot of their businesses, right? We have a customer that tells us what they plan to buy and when. They put out an annual budget for the next 5 years. And granted, there's a lot that shifts from one year to another. The budget might go up or down depending on political environment and what happens in the world. But you have a stable base of long-term programs. So if we're looking at areas that we want to get into, we know with some level of precision, the markets that are growing, the key areas of focus, those will be prioritized ahead of others. Then from there, which ones, which of those, I would say, kind of as the next layer of prioritization depends on the particular target. How attractive is a potential capability? How much does it strengthen our profile? Is it actionable? Does come into play, right? We can have all the aspirations in the world to build in a particular market or area, but there's just nothing to acquire, nothing of scale that would make a difference for an enterprise of our size. So that's a consideration as well.
We're getting into some agility now because depending on the target, it shifts your prioritization right there.
To some extent, it has to, right? So we have a core foundation of our strategy, right? We're going to focus on building on our technologies and on our core. We're going to prioritize certain markets that we want to access that might be higher growth. We don't play in certain areas that frankly have attractive trends, right? Attractive. They might be either from a growth or a size perspective, areas of the defense budget or of the defense sector that we should have a bigger play in, where we're underrepresented. But if there's nothing to buy there, if there's no way to get into that area through an acquisition, well, we can wish and dream, but it's not going to matter. So where, it does become a question of, what is actionable, not just like what's available. What has the banker called you? What's the latest idea that they might be pitching, or the assignment that they have, the mandate that they have to sell a given asset, but what is out there that could potentially become available, and that's that layer of prioritization is important.
Can we talk through this gap that we referred to earlier around having this defined strategy, using that as your guide to go find targets, versus this when you find something that you need to start shaping it to the strategy? And I guess there's like a gap because you can't be so disciplined. Here's your defined strategy. You go out and find stuff, or you could be, versus stuff that comes up, it doesn't quite fit in the super defined strategy that you have. So how do you handle that? Does that make sense?
Yeah. So I think having a strategy and having a direction is important. Otherwise, let's just say there's 500 potential acquisitions out there. How do you even start to, segment them and prioritize them? And the first cut you do is like, is this aligned to our strategy? Is a piece of any given target aligned to our strategy? And what is that strategy was the first thing that we had to define when I came here, right? So I've been at L3Harris for not quite a year, right? And the first thing that we did was say, hey, what is it that we want to be? Where are the areas that we want to focus? And moreover, what are kind of the general parameters of the types of businesses that we want to go after? Because the thing about, and this isn't unique to the defense sector, but you can play across various areas in the value chain. You can go from being a platform prime where you're building the F-35, you're integrating all the pieces like Lockheed, all the way to the guys who make the circuit boards. Well, in between that are, components, subsystems, systems, mission systems, and then finally the jet. So first, do I want to be in the airborne domain? Then where in the value chain do I want to play? And, I could as L3Harris say, well, I really want to be the one that builds the jet. But that's not a really okay, go acquire Lockheed Martin, right? That's not gonna that's not a reasonable approach. So you have to tweak your aspirations and your strategy to what is you're able to accomplish. So in the airborne domain, where we don't have the credentials and the quals to build the jet, we are very focused on the mission solution set, right? So whether that's going after electronic warfare or the integrated core processor, kind of the brains of the jet effectively, or a variety of other kind of airborne mission solutions that we can work with Lockheed to integrate into the jet, that becomes your focus. And then from there, okay, that's the part of the value chain where in this market, it's key for us to play. Now, what are the areas what are the targets that could enable that strategy, right? You go too far down the value chain, well, you don't want to be a small-time component supplier. You want to play up, right? You want to play up in that prime space and start tying all of these different pieces together, right? Building that whole integrated mission solution. So there's a set of targets narrows down pretty quickly. And you know what? You go from your 500, then you focus on airborne and maybe it's 100, and then you go on the value chain and maybe it's 10, and then it's ones where you have the core and it's like 1 or 2. So we're not talking about trying to prioritize an unwieldy set of targets. We're trying to figure out how to get 1 or 2 deals done in a particular area, right? And
okay,
that answer across the value chain, that might be different depending on the domain you play at. Because in space, for example, in responsive space, we've taken a lot of prime positions where we're integrating in the space vehicle. And we're putting the pieces together the same way that Lockheed does with, the fighter jet. We might be doing it on the space domain. And that's what I mean. Like, depending on where you are, you're in different position. We might be, Lockheed could be a supplier to us in certain instances. Rarely they're big, but it does happen.
Because a lot of this is just through the supply chain. You can identify stuff and kind of look around it as well.
Supply chain. So yeah, supply chain is a factor. I mean, in a lot of instances, our focus is really on who are we. It's adjacent areas that we don't necessarily play in. So like in space, there's the payload stuff. So the optical imaging, the sensors, all of these things that actually do, perform on the mission. And then, there's the structure, right? The bus, the satellite bus that you actually launch into space that carries all of these payloads and all these sensors and everything. And those are different pieces. They might actually appear kind of in the similar place on the value chain, because you could be a prime making either one of those. So it gets pretty complicated quickly.
Yeah, I can see that. How does it work when you do have a target in terms of communicating how it fits against that strategy? How do you talk that up through? Does it go right up to the CEO?
Yeah. So, I mean, ultimately, our focus is not on, making making a lot of small acquisitions. Our focus is on going after scale and after doing things that matter, right? And for larger companies, as you appreciate, a deal is going to take as much time, whether it's $100 million or it's $1 billion. Sometimes even the larger ones are going to be simpler. So you want to make sure you're prioritizing from a resource perspective the things that actually move the needle. And I say all that to kind of as the preamble for, I personally believe that M&A is a CEO's game ultimately, right? So the CEO runs the company, sets the foundation, sets the strategy to drive shareholder value, right? Of course, he's got a team around him to help him do that. But the goal is to grow the top line and profit growth and deliver shareholder results. So our CEO is intimately involved in any deals that we might be looking at. And obviously, depending on the stage it's at, it's not like he's going to be in the sausage making, but we have a quarterly cadence established where both the corporates on my team, me and a couple of individuals from my team will brief the CEO and a couple of our CFO, our general counsel, who really form our, frankly, deal review committee. So it's really the four of us that review all transactions for approval before any major milestone. But we'll also have these pipeline reviews where we evaluate the strategies, the potential acquisitions or targets that align to those strategies. We'll do that at the corporate level because there might be certain instances of us going after, or at least, trying to be provocative and looking at markets that maybe aren't aligned with each one of the corporate segments. It's one of these like, look, here's some stuff that could happen. These are things we should continue to monitor because even if we don't do that deal, it could fit one of our competitors' strategies. And here's how it could enable them. So we need to have those constant conversations. Those deals might not be part of the active pipeline, but it's certainly an ongoing discussion. And then we have each of our segments. So we have 3 segments that we operate in: our communication systems, our integrated mission systems, and our space and airborne systems segments. And they will come and brief on their top potential acquisition candidates that are aligned with their strategies to ensure that we're, again, working this top down, bottoms up, and on a monthly basis, frankly, an ongoing basis. We have a cadence with each one of our segments where we'll work with them. So I have members of my team that will ensure that pipeline is constantly being worked, that we're evaluating and dispositioning candidates on an ongoing basis. And that's just the stuff we do proactively by, knowing the players in the space, doing our own work, doing our own screens, frankly, getting ideas from bankers, not necessarily what's in the market at any given point in time, but what could make sense, what could come up, what could be actionable in the next X amount of years. And then certainly as things do pop up, we have not been surprised, right? We have anticipated deals in advance of them coming to market. Our organization has been, frankly, prepared and on notice that, hey, before anything even comes up, this is coming. This is how it aligns to strategy. Obviously, once you get under the covers a little bit, you get the NDA process for deals that could make that potentially make sense, and you start evaluating. That could all shift, but we've been proactive in setting up these processes so that we're prepared.
It's interesting how you walked me through the strategy development part, which is pretty well aligned with just good practices for building our M&A strategy. But then when you're actually putting in play, it just sounds like your aperture is still pretty open, that you're still looking at a broader lens of things, not just right in there tied to that strategy. Does that sound right?
I would say we will pretty quickly disposition and eliminate targets that are not aligned to a strategy, but we will look at most companies in defense if they touch the sector to ensure that we didn't miss something, right? Because
Okay.
frankly, this has been an active sector in a lot of ways, and it's sometimes hard to figure out from the outside whether XYZ company is really what you think it is. So we haven't been dismissive of things that could fit that don't necessarily fit. But I would say we've been pretty deliberate in like, hey, we are not going down this area of the supply chain. And I can pretty quickly say, we're not looking at this. This is eliminated. That doesn't fit our criteria for where we're going to play, as kind of the new L3Harris. It could have fit a predecessor company, but it doesn't fit us, right? And where we're trying to go today.
Got it. So not too wide open of an aperture, a little bit, but then you're focusing it right in quickly. So you just have that view around the corner of what's changing.
Yeah.
Anything around the strategy itself that evolves shape in terms of how do you reevaluate it and things like that?
Yeah. I mean, I will tell you, so in addition to me joining last year, we've been shifting our strategy overall just as a company. It's a natural evolution. So as I mentioned, like this company is 3 years old. So L3 and Harris merged 3 years ago, came together. They were both legacy component providers. So they played in lower parts of the supply chain, had some positions and some prime contracts where they were really in control and were the lead, but a lot of it was component plays. And the last 3 years were spent entirely focused on delivering on value realization and ensuring that integration goes smoothly. Right? I mean, you look at our strategy and some of the investor decks from 3 years ago, the first thing was integrate flawlessly. Well, the integration management office focused on that business, has been dissolved, for lack of a better word, because we're done integrating. As of the end of 21, we were done integrating. So the strategy is evolving and it is much more focused on growth. So when I came in was kind of the perfect time. Hey, let's define what growth means for us, right? So where are we going to grow? Not necessarily, we spent a lot of time when I was out with 3M figuring out what markets we're going to grow in. The reality is we play in defense. We're going to grow in defense, right? But you can be nuanced, of course. Like, are you going to grow in services? Well, no. We've divested our services to a different market. It's a slightly different approach. There are conflicts of interest potentially between some of your product-based businesses. So no, we're not going to focus on services. We're going to focus on, more of the product and sort of mission systems, let's say businesses. But so there's not hey, are we going to go play in, healthcare? No, we're not, right? We're a defense-focused company. We're focused on being disruptive, innovative, technology prime. So that's been the focus. So what does that mean? As a growth strategy, we want to prime more. We want to increase our content in areas where we can't prime, and we want to expand some of our addressable markets. But the caveat here, I'm not talking about going into healthcare. I'm talking about going into certain capabilities where we just don't have as strong of a position organically. I'm also talking about growing internationally. So could that be an M&A? Yes, but M&A internationally is inherently more complicated. It's also very complicated with the political environment. It's not sort of a U.S. versus others, but it's really like, if you think about what defense is, it's a national practice, right? It's a national thing that every citizen of a given country has some say about, right? So do you really, we have allies, of course, right? We have the Five Eyes, we have everything. But the reality is there's a lot of sensitivity around defense companies, cross-border mergers, U.S. government kind of taking stakes in XYZ. So we do have a lot of partnerships around the world. Obviously, acquisitions have happened between US and European companies over time, but it's not as straightforward when you go international. So we define that strategy. That was the first thing, and then we started building our pipeline and looking at, hey, what are the assets in the landscape of potential targets that are out there? What can we go after that first fit these criteria, and where do they fit? How well do they fit? And how well do they align to our current, again, core technology areas, where we have capabilities or gaps, but where we have capabilities to build off. So strategy, I mean, to me, strategy is always foundational, and that's what comes first. If you're just out there running around looking at potential targets, you end up getting yourself in a lot of trouble, because part of what makes M&A work, and the reason it could be an attractive growth lever for both top line as well as shareholder returns, your underlying profit growth. But the only way that works is if you execute a strategy for why you did that deal in the first place. And to build a strategy after you acquire or try to rationalize it after the fact is challenging, in my view.
Is it because of the value creation net, or because of just the narrative and how the perception to investors and so forth looks like, or is it the scale between the two?
I think if you do deals that are not aligned with your strategy, you quickly get distracted and lose focus, because you now have, look, in a large company, right, as you appreciate, you have to deliver the quarter, you have to build your strategy, you have to execute your strategy, and you have to go after growth using every lever that's available to you. But all of those things have to have a common linkage. So if your M&A strategy isn't aligned to the way the strategy that delivers the quarter, like, you eventually get disconnected, or the leadership changes. And now nobody knows what the strategy or the acquisition rationale for a given transaction was, because it was never clearly, set up and communicated, right? And it's, you have a big team that's trying to execute a given value realization or integration strategy. And if that wasn't crystal clear at the beginning, you're much more likely to fail. I'm not saying you will in all cases. Of course, you can power through things, but there are so many ways that things could go awry. Not to have at least the basic building blocks of strategic rationale that built out well in advance of doing or even pursuing any acquisition, in my experience, is a mistake. It's a recipe for disaster.
Do you involve the business leader when you rationalize the target?
So we don't rationalize the target. We try not to rationalize the target, and we absolutely are going to involve the business leader, right? And again, look, there's always the exception, right? There might be a situation where you're going big, right? And I don't know, the merger of L3 and Harris. I'm going to guess that there wasn't a lot of business level discussions around why this or that makes sense, because in the end, the strategy was an enterprise strategy on both sides. This is why it makes sense for us to come together. And look, we're both smaller than the big guys, bigger than the small guys, lots of synergy, value creation potential, but it's a CEO to CEO connection, as I imagine. I wasn't here, right? I wasn't a part of that transaction. But in that instance, okay, maybe you don't involve the business leaders. But in the end, as I think about the majority of deals that you're going to do, especially I'm a big believer in a programmatic M&A strategy, as McKinsey would call it, right? Where you're going after a very deliberate, consistent approach where you build a pipeline, you identify targets, you go after targets, and you continually add on capabilities and through acquisitions. And in that instance, those businesses aren't going to be, mergers of equal. They're going to be capability adds. They're going to be areas where we continue to build on our core technology strengths. They're going to fit into one way or another into either a segment, so the bigger piece, or what we call a sector. And we need to figure out who's going to own that. The business leader, it needs to fit the business's strategy. It needs to fit their mindset, and they actually need to figure out how we're going to run these businesses together. And I'm not suggesting that in all cases it's just, we need to absorb it, right? And we need to put them all together, smash it, and they'll all be in one thing because it'll be under one business leader. In certain instances, there could be rationale for actually keeping things side by side, right? And building center of excellence type effort through acquisitions, you build a center of excellence that can enable the rest of the organization. But the people who are going to run this are going to be best positioned, and for whom this is key and strategic, are going to be best positioned to help truly evaluate and frankly sign up for that future value realization or integration plan. Are
you bringing them in the first meeting from the get-go, or when do they get looped in? And then do they bring you deals? Like who brings deals to who?
I would say it goes both ways. More often than not, because we have been proactive in building our pipeline, we have certainly vetted, our pipeline with our business leaders. Hey, here's what we found. Here's why it made, we think it makes sense. And this is that cadence I described, right? We have a monthly cadence where they're bringing us targets. We're doing independent work. My team is doing independent work. We get together and we kind of hash it out, right? And we found 80 to 90% of the time, we end up with very similar, especially things of scale, where they might have a unique view as certain very niche capabilities, right? Smaller assets that might plug in and provide that extra incremental, gap filler. On things that move the needle, we're going to be 90% aligned on the things that fit and why they fit. Will we bring them in and how early we bring them in? It depends. Generally, look, they have a business to run, right? So until something is active, we try to leverage them for insights. We try to leverage them as we do our own internal work, as we do our own evaluations before a deal is active. We ensure that, we're leveraging their business knowledge, their customer knowledge, their potential knowledge of the target even, because, and I mentioned this in some of the way I was describing the defense sector, right? We compete, we supply, and we partner with the same companies depending on what we're actually doing. So in a lot of instances, we will have established relationships with a potential target in areas where we don't necessarily or with individuals within that company that might not have any view of that there could be a potential deal or they could be sold. But the business leaders will have an understanding on the basis of those relationships, discussions, where we collaborate, what the potential opportunity set is. So it gives us, an advantage in that way to use their knowledge. So we do try to keep them more on the outside and be cognizant of the fact that, hey, they actually have a business to run. And they have to, deliver the quarter, deliver the year, deliver the plan, right? First and foremost. So once we do get active in a deal, once it looks like there's something truly actionable, yes, we're going to start getting them involved, start getting them up to speed. They have strategy and business development people as well. We have them sitting at the sectors. Those will be on the front end, right? Those are going to be the ones who are really thinking through, but always working with the actual business leaders to dictate how things should work. And, especially from that value realization financial plan, what are we committing to perspective?
You mentioned the integration part too, that they're going to ultimately own that. When does that thinking come in play What does that look like?
Pretty early, because I think once we get an understanding, and I should say pretty early, I mean, in the initial evaluation, it's all about strategic alignment. Strategic alignment, can you make the numbers work? And I know we haven't been talking about valuation, M&A, returns, things like that, but like that's critical, right? In the end, if we're buying businesses and throwing money around and just destroying value, it doesn't work. We have to realize appropriate returns. We have to pay appropriate prices. We have to be disciplined to ensure that we're continuing to generate shareholder value. So that's key. But the way we do that is through integration. So in order to inform what we could potentially, what a given business is worth to us, what kind of returns we could realize and what we could pay, or, it's not just about, hey, does our balance sheet support it? It's like, hey, what is the potential cost synergy realization? What is the potential? And that's in a lot of ways going to be dictated by the integration plan. So the level of integration will drive the potential synergy realization on the cost side. It'll drive the way we run the business and, the cost that we need to incur up front. And that has to happen early on. I mean, the level of detail will be different, right? If we're participating in a first round process and we got a sim, or maybe we had a fireside chat or an early presentation and just a conversation with management, I mean, we're going to take a high level view and say, this looks like a business that we could integrate pretty directly because we do something similar in a lot of our businesses and we can run this manufacturing. We have space at a given facility, so on and so forth. Or we take the opposite view and it's like, look, this business is pretty special. And what makes them special is the fact that they operate very differently than we do. So we actually need to keep it intact and not integrate it in the way we would separately. That conversation happens very early. The detailed, hey, we need to really talk about integration and the details of HR, payroll, how do people get paid on day one? That happens as soon as, kind of once we get past this initial hurdle, if you think about traditional M&A process, kind of that second round conversation, once we start getting into more detailed due diligence, that's when we get into those questions.
Now you're making my head spin. All right, now I wanted to track this interview and just have a friend-to-friend conversation. I want to take your blended experience from investment banking and corporate development. Can you teach me how to pitch a deal to a VP of Corp Dev?
That's a good question. It's a good case study. You're making me.
I know it's the right question right? For you.
So look, I mean, for me to buy in to a deal, I need to, again, I'll start from the beginning, right? What is the strategy? Forget the strategy for this deal. What is the strategy for the business as we have it today? And how does that target or that particular transaction align to that strategy? For me, that's the fundamental question. Before we get into price and valuation and why this makes all the sense in the returns world, right? Like that doesn't matter. We're not a portfolio holding company. We have to have strategic alignment between the core business strategy and any target that we pursue. So that to me is the first, the first question. And then we start getting into, okay, what is the financial profile of the business? What is the valuation? What are the returns that this business will generate? Is it accretive? Does it cover, call it our cost of capital, right? What are the long-term returns on invested capital that we can look for?
You expect me to have this put together prior to reaching out to you to pitch you this, right?
So it depends on the state. For us to engage in a transaction. So if a business leader is saying, hey, this is really strategic for me, we need to dig into this company. In a lot of instances, we're not going to have all this stuff, right? Yep. So depending on the phase that we're in, right? I'm kind of skipping all the way to the end. Like if you want me to buy in and sign on the dotted line and we're buying this company, that's the level of analysis. In order for us to, hey, we should really look at this because could be really interesting. It's that first strategy lens, right? What is our strategy? How does the given target align to our strategy? Why does it fill XYZ gap? Is it is it an accelerator of growth? What is it, right? Why does it make sense? How does it bolster us? How do we potentially make it better in a way that we can't do organically?
Okay,
And
so
so the strategy piece to me is the first thing.
Strategy, then valuation.
And valuation, it's going to come later, right? I was sort of going.
Okay. So just pitching the part. Now I look at it as two things. I could come at you with a company I have an engagement with, and that's my job is to sell it, right? Which is pretty common. What if I come to you with an idea? Let's take Gulfstream, for example. I think would be a phenomenal business unit for you to tack in your portfolio. Do you have that? Do you see people doing that where they sort of, it's not something under any kind of thing. I'm just pitching the idea and I'm willing to do the work. I'll chase down General Dynamics and we'll get a conversation going here. But what do you think, Daniel? Is that something that would align with your strategy? I got my idea on how I think it'd be a great addition and sort of bolster, given whatever financial information I can pull up. I'll make it a nice, pretty chart that goes up and to the right, and it's going to look good. But yeah, I mean, how do I get that conversation going?
So absolutely, right? Yeah. Not absolutely does it fit the strategy, but absolutely we get those kinds of, pitches. And it's always a good conversation. It's a good test of how well aligned are we and how are we willing to stick by what we've said. And again, I just come back to the fact that we have a strategy for where we're pursuing. We're going to be a defense company that is continuing to move up the value chain and focused on disruptive, innovative solutions that enable us to, one, prime more, increase mission content on core platforms, or expand our addressable markets in defense areas that we don't play in today. Gulfstream fits none of that, right? Gulfstream is a terrific, fantastic, by all measures, business jet manufacturer. Awesome. Just not the right business for us.
You mentioned jet earlier, and it's just an adjacency.
It's right. I did. You know what, though? The interesting part about a company like Gulfstream, in some instances, they could be a great partner because we have a missionization business that out in Texas. We're actually one of the leading providers of, ISR solutions where we actually missionize aircraft, and Gulfstream is one of the platforms that we utilize.
We don't need cost synergies. A lot of cost synergies if you could spy them out.
So we don't need to own. This is the question of value chain. Do we need to own that in order to continue to grow as a company and grow as a prime? And we don't. What makes Gulfstream isn't our business. What makes Gulfstream is all of the business, all of the sales to non-defense customers. And that is not an area where we have a lot of, I'll say, expertise, right? We don't play in commercial areas today. Or sorry, I shouldn't say that. We do play in some commercial, but commercial aerospace and that business jet customer set, that market is very different. Great market, terrific customers, but not a focus area for us. So your point of prioritization, you got to prioritize, right?
Daniel, I get it. I'm a little off base on my strategy. I admit I should have done a little more homework. But as an outsider, how could I do more homework to better understand your strategy besides listening to earning calls, transcripts, or reading them?
Yeah, look, I mean, I think there's an element of our strategy that we have to some extent, keep under wraps.
Yep.
I
think we're speaking just for the matter, like public companies.
For sure. Yeah, for sure. I do think, for the banker set, for example, right? For the individuals who cover us, who track us, they do a really good job, right? I mean, I will tell you, looking at some of the research analysts and the way they describe our strategy, I mean, it might not be 100% on point, but they listen to earnings calls, they engage with management, they engage, with me or whoever it might be, our CEO, certainly our CFO. And there's a consistent theme coming through that you can see across the investor decks that we put out, the research reports that we put out, the earnings calls that we put out. So when you talk about how do you learn the strategy, well, that is frankly how you learn the strategy. You engage with the management team to try to do that.
Okay, fair enough. In terms of compensation, could I work it out where I could get a jet as deal fee for putting the deal together?
Are we still on Gulfstream?
Yeah, I just want to make sure I'm incentivized or aligned.
I thought we just positioned that one.
I just want to come back to the how I get paid on this stuff. That's all. I heard there was a story.
Go ahead.
Of the CEO that turned around the company, that when he was on his way out, they offered him a gift and he was like getting a jet. I don't know if he got a jet, but I don't know. Anyways,
I'll keep that in mind.
I know we're getting close on time, Daniel. What's the craziest thing you've seen in M&A?
It's a good question. I know there are a lot of crazy M&A stories out there, right? Super complicated deals. I certainly been in my share of complicated transactions or things that didn't go as planned, but crazy is not a word I would attribute to it. I think what I would say is overall, I think what's happening across the M&A landscape, and this is not a defense sector specific question, but what I would say is the regulatory landscape is unprecedented. And while I wouldn't say, or attribute, crazy to that landscape, the fact that we are talking about FTC, reviewing deals that have been done years ago, like Facebook, WhatsApp, Facebook, Instagram, for example, not to mention some defense ones, that's going to give people a lot of pause in posture and approach. And it's frankly going to change the way we do deals to some extent. In my experience, I think you will start involving professionals helping answer those regulatory questions a lot earlier. You might start having to involve them in an active pipeline dialogue, discussion. Could we even contemplate growth through M&A in these areas? And I don't know that has been that has been the case historically. Now, how long does that last? It's a good question. But to me, that's a little bit, in my experience in the last 20 plus years, that's probably the most unprecedented sort of set of events and just narrative around the environment that I've seen.
You get me fired up about this. This is, clearly the government doesn't understand M&A, and we should band together, sponsor lobbyists for corporate M&A to help them better understand the value that gets created. And M&A shifting. It used to be the bad triage of finances and stuff, but now people understand it's all about the people. How do you line them around a vision to innovate and create value? I don't know.
I completely agree with you. It is all about the vision, creating and increasing competition, ensuring that you have a supported industrial base long term, and that you're continuing to innovate. And in defense, it's all about delivering the most innovative, disruptive, solution to meet the mission and the demands of the customer.
This is it. And those of you tuned in, talk to your local governors and senators, help them understand. And yeah, we can't be focusing on this stuff. That's not what government should do. Should do greater good. But that's been awesome. Daniel, I appreciate the conversation. I learned a lot. You're helping me become a better M&A scientist. And till next time. Here's to the
My
deal.
pleasure. This has been fun. Thanks a lot for the conversation.